A car without an airbag is the same as an economy without insurance. We present M&L, the first and the only insurance institution with a credit rating. Also, the company is the leader in terms of asset and risk capacity and was named as the best domestic insurer by Insurance Asia Awards. Therefore, we issue a buy recommendation representing 25.9% upside and acknowledge that M&L stock to be undervalued for 3 reasons. 1. The company has cemented a strong competitive positioning to capture rising demand. Second, driven by efficient underwriting, the company will enjoy high profitability in the long run. And lastly, their growing investment portfolio will generate more value for its shareholders.
Thanks, Hala. Let's move to our first point, strong competitive positioning. Within the rapidly growing and resilient industry, M&L is experiencing a growth 1.5 times higher than the industry at a rate of 30%. Indeed, M&L owned a market share of less than 10% in 2015, but in only 4 years, the company became one of the market leaders, proving that the company is well equipped to capture rising demand given 3 reasons. First, high barriers to entry. M&L's favorable position will be maintained given that the threat of new entrants is low. Barriers include brand recognition, where consumers show a strong tendency to purchase from established brands as reliability and trust are crucial in the financial sector. Another barrier is imposed complexity. Entrants are required to follow and operate under strict regulations. Lastly, with a steep learning curve, established companies such as M&L enjoy economies of scale, making it extremely challenging for entrants to compete. Secondly, M&L knows what the market wants. 50% of M&L's underwriting income is generated through its 2 strategic products, accident and health and automobile insurance, and they are looking forward to developing the 2 policies in the upcoming years, as total premiums generated in the industry are growing at 26 and 14% respectively, indicating high demand. Finally, M&L's adaptable nature cements its position in the industry. During the pandemic, M&L has launched a new insurance product, COVID insurance, implying that the company is able to turn the tables in its favor. Also, the company has released its mobile application where claim settlements can be processed easier and quicker, increasing efficiency.
Speaking of efficiency, let's move on to our next point. M&L's underwriting efficiency has made a remarkable advance. For example, the company's net earned premium per employee doubled from 65 million to 130 million MNTs in just 2 years. Resulting in a reduction in expense ratio. M&L has also managed to keep its expenses relatively stable even during the times of economic crisis, leading us to believe that the company will enjoy a long-run cost efficiency. Historically, the company's loss ratio has shown a declining trend as well, but it couldn't evade the pandemic effects, rising to 40% in 2020. However, its continuing cost efficiency will offset the additional losses, keeping combined ratio under 100% and ending the year with an expected net margin of 19%, is still superior to both its domestic and foreign peers. With gradually improving outlook for the loss ratios and stable cost efficiency, we expect net margin expansion of 700 basis points over the next 5 years. Moreover, M&L has delivered an astonishing ROE of 31.8% in 2019, which is the highest among not only its peers, but also all the other companies listed on the Mongolian Stock Exchange. With its improving net margins, M&L is expected to experience a ROE growth of 426 basis points over the next 5 years, implying great returns for the shareholders. And lastly, we believe M&L's healthy and stable leverage position and sufficient cash generations will enable the company to capitalize on a sustainable growth for the years to come. Now, we'll come to talk about investments.
Thanks, Muxia. So, M&L is the industry leader in terms of investment amount with a total investment of 27 billion MNTs. And also, company boasts high return on its investment with a return of 15.4%, and that is 1.4 times higher than the industry average. M&L's investment strategy involves, as much as possible, Thus, with the company's high profitability, company's investment amount will be projected to grow at 19%, and consequently, investment income will also increase at 14%. As we mentioned before, MNDL's combined ratio is below 100%, meaning that all of the investment income will be recognized as a profit, resulting in operating ratio to decline 13% from 2020. Collectively, investment income will continue to support profitability, ultimately generating great returns for shareholders. And investments are highly liquid, with more than 90% of total investments are in the money market, and the high quick ratio of 15.7 in 2019. We see that the company will be able to satisfy unexpected liquidity needs if claims rise. Now, Ihochi will talk about valuation and risks.
Thank you, Bisgong. Let's talk about valuation. We used a combination of a weighted free cash equity and residual income models, yielding a target price of 59.20 MNTs, representing an upside of 25.9%. So, what is weighted FCFE model? Because Mongolia's economy is an emerging country with high market volatility, accurately computing the terminal value via the terminal growth rate or a multiple are both prone to be inaccurate. Thus, both are weighted to reduce the errors. Similarly, considering volatile market conditions, assuming the same cost of equity for the forecast and terminal horizon would be invalid. For instance, we believe for a going concern assumption, market volatility will subside, which is why we lowered the equity risk premium for the terminal cost of equity, as market return will decrease. For the terminal value, we used the terminal growth rate of 4.1%, and for our FCFE multiple approach, we used the forward-looking price-to-book value of 0.99x, which was derived from 20 foreign insurance companies in emerging Asia strictly operating in the non-life insurance industry. Furthermore, because peers had significantly larger market cap, comparing multiples today would be unreasonable. Therefore, we used the multiple in our terminal value, assuming that MNDL would converge to regional peers at the terminal date. Now, let's talk about investment. Let's talk about investment risk. Currently, the most probable and relevant investment risk is the pandemic. Never say never. As businesses and schools reopen, a new surge of COVID cases may arise, leading to another lockdown, ultimately disrupting the recovery of the economy. However, our sensitivity analysis showed that, ceteris paribus, real GDP would have to decrease by 610 BPS for this risk to materialize, which is highly unlikely. Now, Ho-sung will talk about the ESG of the company.
Now, let's look at MNDL's ESG score. From an environmental perspective, MNDL plans to develop its online sales channels and mobile application, which allows them to operate with only 3 branches, reducing wastes. However, as this was mostly indirect green byproducts of the company's strategy, we gave it a score of 2 for their environmental responsibilities. For social responsibility, we attributed a higher score of 3.25, which mainly driven by company's employee satisfaction and care programs. For the company's governance, we gave a point of 3.4, which is mainly driven by company's highly educated and experienced board of members, most of them being well-known in the sector. Overall, we gave an ESG score of 3.07, which is an exceptional score in Mongolia, such the concept is not readily used and considered by investors and companies. Hence, we believe MND's score to be an attractive for sustainability-conscious investors.
As you can see, MNDL has built a strong base that would not be hindered by a sudden gust of wind. In fact, it is the perfect time to get involved in the stock market, as historically observed, Mongolia's market boomed post-recessions. As history tends to repeat itself, when the economy recovers in 2021, MNDL's price is also to go up, making a stock low risk and high reward investment. So, we issue buy recommendation on MNDL. Thanks for your listening, and we are open to questions.